Time we took a look at a relatively tamed index. Hello, everyone. Monty here, market analyst at IG, with another technical cheat sheet video where we take a look at key technical indicators in order to formulate a technical overview. That way we can prep those strategies. Now, if you think the technical overview is going to hold, great, but some of you out there might agree to disagree on the matter. And that means that we need to have those strategies ready for when the overview fails. We're going to be taking a look at it levels in both daily and weekly timeframes, as well as sentiment. Though for this one, we don't have any data when it comes to COT speculators. So we are going to take a look at where they stand when it comes to key US equity indices before flipping back and mapping sentiment onto the chart, as well as fundamental considerations for this week. So let's go ahead and get started. FTSE 100. And you take a look at the chart and you're like, my goodness, is it ever going to get out of these ranges? But price for the time being, not above all its main short-term weekly moving averages, but above, I should say just above when it comes to all its main long-term weekly moving averages. A DMI that by one calculation is in negative territory, not just there yet by another. An ADX that between 20 to 25, it really depends on what your classification is of trending. But if you take 25 and above, it's not quite there in trending territory just yet on the weekly time frame. And RSI nowhere near overbought or oversold, and price falling off from the upper end of the band. You look at that and you go, wow, most of these are neutral. Doesn't that mean that combined with, we don't have any sort of bull or bear channel, and that kind of means that we're looking at a more consolidatory overview. But keep in mind, especially on a weekly time frame, we haven't always had controlled movement to and from the average. And that means that overall, you're looking at added caution whenever you're going against, which means that, off the first resistance level, for example, you're selling after a significant reversal, so waiting for the level to sort of get breached. And then if it comes back, you can go ahead and initiate if you think that indeed it's going to move back towards an average, or going for buying after a significant reversal off the first support. Contrarians are going to be the opposite. You're going for breakout strategy, so buying off the first resistance, selling off the first support. But the thing is that when it comes to the weekly time frame, one thing to notice is that volatility seems to beget a bit more volatility, in the sense that whenever you have a very, very volatile week, which is happening after a lot of narrow or range-bound intra-week movement, a lot of times that means that you're going to see movements well above first or second resistance levels. And I'm talking about that kind of volatility. The week after, price isn't usually going to settle there. It's either you're going to see a sort of recovery, which might take a week or two or three to occur, or you see another volatile move. So it's calm, 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 and then you got the storm, and then you got another storm, usually the week, or combined. If you combine the next 2 weeks, it's a storm afterwards that doesn't usually give a chance for weekly levels, which are still, if you average it out, still relatively narrow to really catch up to what have been some recent volatile moves. So that's something to keep in mind if you're trading this in future times, where you're looking back and you're saying, okay, that, last week was a relatively volatile week. Now, there is also the matter of, okay, if the first levels have been quite good in terms of being a center of gravity, why not making a move prior up to the first level? So buying it before it reaches the first resistance, selling it before it reaches the first support. There's also the matter of, okay, if initially it's going to provide a test, or if the resistance level is going to prove to be, offer resistance in the beginning, but eventually, is there going to be follow through beyond it? Therefore, if I go in a little bit early, is there a chance? If you look at the week on week action, on the weekly time frame, you'll notice that there have been some weeks where going in early is going to cause failure, even if you take it up to the first levels. But on average, it has offered follow through eventually. So that's the idea behind it. It's that, okay, there might be an initial test. You might even fail on one or two tries, but the idea is that, is there going to be eventual follow through beyond these levels, but it's obviously going to take a little bit more time. So what exactly what's the distance between the RSP and the first levels? Again, as for this week, you're looking at the distance of 103 points. And when it comes to the stop loss, I say that always at your discretion, because you want to weigh it up with whatever it is that whatever it is your reward's going to be. So you make sure your risk reward ratio is correct. But we're looking at around 51 points. So that's when it comes to the weekly time frame. Let's zoom into the daily time frame, where you can see that even here, at the end of the day, coming back towards an average. But the technical boxes actually for the start of the week, we're talking from Monday as a daily, matching up entirely with the weekly. So once again, looks the same, although three of them can shift with great ease. The price with respect to short-term moving averages, when price actually came up to the upper end of the band, you had three of them flashing green, and briefly you had a time where you had a positive DMI cross. Now it's back into negative, but you look at the other stuff, pretty much matching up with the weekly, and that means that once again we're looking at a consolidatory overview, clearly suffering from price indicator proximity that can tilt a few of these technical boxes. And it all just means that, once again, it's another cautious approach. Although one thing to note is that although the strategy is going to be the same, so performance are going to be, you're selling after a significant reversal off the first resistance, buying after a significant reversal off the first support. Contrarians are once again going for breakout strategies. One thing you want to notice that the patterns day to day is that you've got 1 or 2 days where it's going up, 1 or 2 days coming back down. We're in this phase right now where you're getting a little bit of follow through from day to day. And that just means that you're going to have to be a little bit more cautious because remember we talked about the weekly time frame, for example, where it's calm, 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 hit. When it comes to daily time, it's sort of like calm, calm, and couple sessions here, a couple sessions back down, a couple sessions here, and that means you want to time that. Even though we're looking at this just for the day itself, and that means that sometimes people are saying, okay, well, if that's the case, why don't I go for instead of working off the first levels, why not work off of the second levels for a certain session? But the thing to keep in mind when it comes to the second support, second resistance, and a lot of times the action is around the first, but the second can be considered. But maybe you want to go just with the daily time frame. That if it is a sizable volatile move, maybe consider after reversal instead of going for outright fades where those are much more likely to get stopped out. And why is that the case? Because if you look at you calculate the amount between the RSP and the first, and for Monday, you're looking at around 40, though if you're looking at watching this on Tuesday, Wednesday, Thursday, so on and so forth, you just readjust the RSP, and you do want to take it up a notch when it comes to the gap between the RSP and first, depending on what volatility is expected on that day. I'll talk about that when we get to the fundamental considerations, as well as the stop loss, which again, depending on your risk reward ratio, at around 20. But notice how from the RSP to the first, it's 40. So then from the RSP to the second, you're looking at about 80, which isn't too far off what we're seeing between the RSP and the first on the weekly time frame. So what about when it comes to sentiment? COT speculators, by the way, when it comes to US indices, mixed story. They were majority buy NASDAQ 100 for quite some time, shifted to the middle according to the most recent report. Still majority sell when it comes to the S&P 500 for reasons that I mentioned in the technical cheat sheet in that for the S&P 500. And the Dow, which has had the highest correlation when it comes to momentum as momentum trades and what we're seeing with the recent moves, we're seeing them start to pull back just a little bit. So still heavy buy territory, but pulling back a little bit. When it comes to IG clients on our end, majority sell all three. In fact, you look at the other key indices, also extreme sell when it comes to the DAX and the Australia 200, though when it comes to the ASX, they might actually drop just because we had a pullback in price that's giving a chance for some of those shorts to get out. Whereas when it comes to the FTSE, it actually spent most of its time in majority buy territory. Intra-week, it was in majority buy territory, but week on week started last week, majority sell 57%, very close to the middle with a slight sell 51%. Buy is going to go in and plot that onto the chart. Blue dotted line, IG client sentiment as percent long looking at the left axis. This red dotted line is the 50-50. Whenever you see the dotted line go above, the majority buy. Whenever it goes below, majority short. Majority of the time, staying in majority buy territory, anticipating or hoping that when are the price gains going to come when it comes to FTSE, as we've seen when it comes to the other key indices that I mentioned. And if you zoom into the daily time frame, it gets a little bit clearer in the sense that every time it goes down, they go to majority buy territory. Trading what have been averages, and the range trading has gotten a little bit aggressive over here within this new zone right over here. But like I mentioned, going towards slight sell. This is a daily time frame. So last week, started a majority sell, and then when you had the pullback right away, going to majority buy, and then we had this gains over here, and then going back into majority sell territory. What about some fundamental things to consider for this week? We do have UK labor data, including wages, which is on Tuesday, or if you're watching this on Tuesday, already passed. We've got plenty of data on Wednesday, which is going to include GDP for the month of January. Hopes are that it's going to shrug off the contraction and offer some expansion. You got consumer inflation expectations out of the Bank of England on Friday. And speaking of the BOE, by the way, market pricing courtesy of LSEG, anticipating the first rate cut by a decent majority in August. It's very close to the middle in June. So depending on what we get between now and then, there's still a chance that June might offer a chance. But, until then, for now, still anticipating that the first rate cut in this cycle is going to come in August. So hope you guys enjoyed this video. Good luck out there.